Welcome back to M&A Corner. We have a special edition today because I have two of my European colleagues with me. I have Dean, who heads our London office, and I have Amélie, who heads our Paris office. And we thought we could spend today talking a bit about what they're seeing in their local markets, as well as how that fits within the broader context of M&A globally. So welcome both.
Thank you for having us.
Dean, first question is for you. You've practiced in London, in the UK, the entirety of your career. It seems like a unique moment politically, economically in the UK. Could you talk a little bit about how that dynamic is shaping how corporates are thinking about the environment and what they might look to do next?
Yeah, look, I think the UK's been through an interesting decade, obviously with the Brexit vote, then the implementation of all of that, the outcomes of COVID and everything out the other side of that as well. I think at this point in time, we have a government that's been in power for a year. It's going to be, 3, maybe 4 years until the next general election. So while the political side of things is showing polls that are, moving in various different directions, it is actually a reasonable length of time before there is a natural point for the political landscape to change. From a broader economic standpoint, we continue to work through the macro factors, the inflationary pressures, and the UK looking to position itself as a place of growth, and that's clearly high on the government agenda. The focus areas from an M&A standpoint continue to be around things that play to the growth agenda. Infrastructure in particular is a huge area of opportunity, capital investment and M&A. But from a corporate standpoint, it's very much around looking to position themselves not just for the UK, but ultimately in line with UK companies over many years, very much looking internationally, very much looking at how certain overseas markets can add to their supply chain resilience, add to their opportunities to have long-term sustainable growth.
Amélie, same question, but I have to ask first. What number prime minister are we on over the last 2 years?
I think we don't count anymore any longer. The M&A market in France remains and is still a very attractive and large market. It's the third market in Europe after the UK and Germany. And it's a market which is still very much characterized by the strengths of their strategic leaders. And of course, with PE activity, strategic players have really led the M&A market in 2025, even though it was a period which was slow. 2025 has been a slow year. When you look at transactions that took place, they have been clearly led by guys like Sanofi, acquiring in the US, Schneider Electric in India, Capgemini in India, Air Liquide in South Korea. It's clearly an M&A market which is led by their strategic players. It's a very global market in this respect. So the characteristic of the French market, which is very much geared towards outbound M&A, is still very prevalent. What we have on top of that, which you are experiencing in the US, is what the AI is basically fueling. So you've got demand increase in electricity and also in the mere electrification of the industry. This is driving capital. This is driving PE investment, pension funds investment into the economy. And this is creating basically a very interesting theme for M&A.
Amélie, you've talked about investment into other European companies, into Asia. Can you talk a little bit about the appetite for moving into the US, for instance?
The US has been steadily increasing their share of outbound activity. The largest outbound transaction in France in 2025 was Sanofi investing in the US, in Blueprint. Clearly, the US is still, if you look at the last 3 years, the US are probably accounting for the largest share of FDI and M&A activity.
And Dean, can you comment on that, particularly the interest in the US from the folks in the UK?
Yeah, so, as you note, FTSE 100 companies, the UK companies in general have tended to look internationally, and the US has always been a natural target market, not just because of certain similarities, but ultimately the growth opportunity and all of the attractions that come from a valuation standpoint from increasing exposure to the US. That hasn't changed. It's fair to say that there is more boardroom thought around what is the right opportunity in the US market and what exposures, for better or for worse, does it provide companies at this particular moment in the cycle. But the fundamental long-term attractiveness of the US to all our international companies absolutely remains.
And maybe you can both comment on this. Are there dynamics as it relates to government and the financial picture in Europe that might influence deal activity?
This is really a pan-European theme. Across Europe, budgetary constraints exist across pretty much every European market. Every European economy is navigating them in their own ways. But a big thematic, which is playing to M&A and playing to capital investment, is infrastructure financing through all sorts of different transaction structures and different ways in which they're being implemented. But I think governments across Europe realizing that external and private capital has a really important role to play in order to move each market forwards in its own specific strategic areas, but also to do that whilst balancing public finances that are challenging across the continent.
In France, are you seeing a similar dynamic?
We do. We are seeing a similar dynamics in France, with state-owned enterprise being challenged, and which will participate to the same trend.
Historically, there's been a bit of a multiple differential between European publicly traded companies and those in America. In other words, that the American companies tend to be valued at a slightly higher level than their European counterparts. As a result, there are opportunities for U.S. companies to invest abroad, including into your markets. If you were speaking to a U.S. corporate client about investing either in the U.K. or in France, what would you tell them about how to approach an opportunity in your market? What would be the right way to try to unlock an opportunity in the most efficient fashion?
So maybe picking it out from a UK standpoint, there's obviously an important difference between public company targets in the UK versus private assets. The public company regime in the UK has the UK Takeover Code. It has a whole host of
very strange rules.
Very important rules that are very well practiced and very well understood by the marketplace. My unsurprising piece of advice would be to take very good advice from well-established financial advisors in the market to ensure you're navigating that to your advantage, but also to ensure you don't trip up. Ultimately, it's got to start with the strategic rationale. Like any transaction, it makes a lot more sense to be turning up to a target board, to a target chair or a target CEO, with a proposition that first and foremost makes sense from a strategic logic standpoint. Then clearly it's all about the price being right and it being deliverable. I think the deliverability piece is a really, really key factor that's perhaps underappreciated when people start off on a journey. It is immensely important if we are advising a UK public company in receipt of an approach that we have a really, really clear degree of confidence around how that deal is going to get done from a financing standpoint, but also around all of the broader regulatory and other approvals that obviously, like here in the US, are becoming more complex and multifaceted.
And in France, are bids from overseas companies generally welcome, or is it a difficult terrain to navigate?
The general geopolitical issues have been extremely important when it comes to tackling M&A in France, not only in mere defense area, but also in any sector. Basically, you need to be accompanied in order to get the right approval and to navigate the overall environment.
Sounds very French.
It is actually very French, but it is inbound M&A is very active in France. When you invest in a French company, you very often invest in a company which is very international. If you take, for instance, the Opella divestment from Sanofi last year, the majority of the business was outside France. It did trigger scrutiny on behalf of the government, In reality, when you are properly accompanied and properly advised, an acquirer would be able to cross the finish line.
We've talked a lot about corporates. We haven't yet talked about private equity sponsor activity in your respective markets. Obviously, it's a very large part of the U.S. deal economy. Can you talk a little bit about the importance relatively in your markets of the private equity community and how they're approaching the current situation as it stands?
So look, I think from a UK standpoint, it would be very similar to the US. Private equity is an enormous part of the M&A landscape. It's very much the same international funds that are over here that are also, present in London. There's obviously a number of European funds that are based in various parts of Europe, but will have a strong presence in the UK market as well. And again, picking up on the similar theme, it's not UK companies because you're targeting the UK. It's UK companies that are international. An awful lot of private equity theses that we've been involved with are actually taking UK companies where the vast majority of their revenue and profit is overseas and potentially bringing them back in some different form where perhaps they relist in the US or re-emerge as a US company because that's where the majority of their revenue and profit actually comes from. The UK is a very open market from a transactional standpoint. There has been an increase over recent years in terms of various governmental regulatory approvals for certain types of transactions, but it still remains an incredibly open market, an incredibly deal-friendly market, and private equity have developed a very strong and broad-based experience set to transact in the UK market, which we are seeing across a whole host of different transactions, whether that be from the more infrastructure fund end of the universe through to more or less every sector that has a reasonable ability to sustain leverage and generate cash flow.
Amélie, similar?
Likewise. Absolutely likewise. You have the large private equity like Brookfield, who have basically been leading the league tables in France. Last year, they acquired Neoen, an IPP group. You have also French private equities like Ardian, who yesterday announced the acquisition of the Irish utility Energia. It's extremely active, extremely diverse across the large cap and the mid cap sectors. You would basically replicate what you are seeing in the UK, in France.
And a really important point on this, which I think is quite different to the US, is looking at public capital versus private capital as a source of financing. The IPO market in Europe as a whole has been pretty low. London in particular is really struggling to gain momentum. We've had a few IPOs in the last couple of weeks finally, but it's been a really, really tough place to find capital. But it's not because the capital's not there. It's because private capital and private equity is so prevalent. There's so much liquidity to come from that world that companies are able to finance themselves without going public. And I think that's certainly something we observe as different over here, where IPOs continue to happen. There continues to be a relatively thriving public market scene. I think, across Europe, the public markets haven't quite recovered where they were 5-10 years ago in terms of being the natural, logical place for private equity to exit or indeed private companies to find liquidity.
As I think you'll both appreciate, there's been a great deal of uncertainty that's been injected into our economies, more broadly speaking, including the impact of tariffs. Wondering how corporates or sponsors in your market think about that uncertainties and how they factor that into their approach as it relates to deal making.
So maybe in terms of some of the experiences we've had, it's interesting because we've often had black swan events as part of how you model out your financial plan, and it's not ever going to be a plain sailing upward trend. There'll be bumps along the way, and they'll happen periodically. The number of conversations we've had recently with people making a very similar observation, which is we've gone from COVID to geopolitical challenges and massive inflationary pressures to tariffs and other issues like that are impacting how people see the predictability of their cash flows going forwards. And they're happening almost year after year after year. And so it slightly becomes a case of these aren't black swan events. There's a more baseline level of risk and uncertainty that has to be factored in. Now, to some extent, this should be and probably is factored into the public market valuations. And investors, around the world in every market are reflecting that and the price on the screen any given day. Certainly one of the boardroom type conversations we're seeing is a real focus around capital allocation. And in a world where you have got greater inflationary pressures and greater premium on equity, perhaps because of the risk dynamics, there is that greater focus around share buybacks versus M&A and the justification of M&A from a financial standpoint, from a return standpoint, over and above the strategic rationale.
I would say that at this juncture, in spite of the political uncertainties, the budgetary uncertainties, French companies, which are very global, have factored currently in their investment decision the uncertainties at a much greater level than it was 6 months ago.
I would like to thank both Dean and Amélie for joining me today. They are partners, but they're also friends, and I hope you've enjoyed our conversation. Look forward to the next time.
Thank you, Kevin.